Hey, how's it going, everyone? Thank you so much for tuning in. It's been quite a while since we went live, isn't it? Thank you so much for joining again, and in this session we're just gonna talk about SPY. We're gonna keep an eye out for QQQ, and we're gonna keep an eye out for Google, which has just had its stock split, and we're gonna trade everything. Like, it's a good open for Google especially, and let's see if we can hold on to 133 here, and QQQ is sitting at important resistance levels as well. So let's go over and take a look at SPY. By the looks of it, it's in the clear no man's land. We can either run a test to 389 from where we are sitting at right now, or come back all the way to run a test to 387. So let's see Google. The numbers have been given already, and oh, they still didn't update it yet. What the hell? Alright, the price will be updated in a bit. It looks like they just dumped it all the way down, did they? Right, so let's see. Google is sitting at important spot as well, so if you guys want to take a risk here, you can go ahead and very well take the risk. So if you guys have any questions, let me know. We can go over different stocks, different stuffs, and I can answer your questions as well. Before starting, I want to know if you guys can hear me or not. So let me know if you can hear me, so we can go ahead and proceed with the stuffs. SPY, we are pushing. Nice. Looks like QQQ is headed towards 297. So the question is, will it hold, or will it gonna dump off from here? Interesting. All right, so we had a lot of good news coming out on Friday, to be honest. And the Friday we had consumer sentiment index, which was pretty positive, and after consumer sentiment index we got the, what else we got on Friday? Non-farm payrolls. That's last week. So all the news whatever we got on Friday was pretty much good, and there was, market is showing optimism based on that. So there are still upsides, more upsides to come over here for SPY and QQQ. We can easily touch 297 or even 300 to fill the gap on QQQ here, provided we stay above 297. And for that to happen, we need the other big techs to cooperate, like Apple, Microsoft, Google, Amazon. All that should cooperate if we want to reach that level. So let's see what Google is doing. Google is still bucking to that 113.30 over here, which is an important number. And is Google, I mean, like, for my trading view chart, Google is like freaking out right now. It's not updated yet to the stock split. Maybe it takes a while, but showing me minus 94%. Like, it's absolutely ridiculous. Is it fine to you guys, or are you guys facing the same thing? Because in my end, it's just showing me Google is down like 94%. So that's fine, doesn't matter. So if you guys want to go long on QQQ, your risk is at $294. Sorry, yeah, $293. And if you want to go long on SPY, well, your risk is at 387, and your first securing profits will be at 389, and the second securing profits will be at the 50 SMA, which is currently trading at $392. So 387 is important, 392 is important. So if you guys are trading AMD, watch out for AMD to run a test all the way to $85 from here where it's trading right now. Above 85 we can push to 89 bucks, which is also the 50 SMA. So looks like Merck is not having a good day over here. Merck is coming to lower. Let's see what the semiconductors are doing. Mine shows it's up one. Oh, nah, it is up. The problem with TradingView, let me show you. It's updated right now. Good. Yep, it is updated right now. So if you want to trade Google, I mean, you know where your stops at, like 318, 313.20. If you follow me on the Discord, you will know it. I sent out the updates for the Google. So watch out for it so we can push higher on Google here. I was just checking the premiums. It is kind of expensive compared to the moves, whatever we are gonna get. So watch out for it. So if we do push higher, keep an eye out for 115 and keep an eye out for 117 up north. Those are the two numbers to watch out for in Google. As long as price is above 135, we can push all the way to like 115 in Google. What happens with options before stock split? Let's say if you have one contract of Google before stock split, you'll be technically having 20 contracts after stock splits, because 20 contract after stock split, because like just like stocks, your options will be splitting as well. So you'll be having 20 for every one option contracts you owned before and after split. It's something to keep an eye on. So let's see if the Google can hold on to 115 or 113.20 or 135. Oh, I mean 113.09 over here as support and keep pushing higher. If we do, that's a good thing. We can see much higher prices to follow. If not, it's gonna be not so good. Be keeping an eye out for it closely. So let's see. So this is the problem. The 15-minute charts are not updated yet, and only the daily charts is showing properly with the proper signs. Other than that, nothing else. Nothing else is normal with this. It's gonna take a while, I guess, for the softwares to update. Until then, now we gotta wait, I guess. Looks like we are breaking under here. Looks like no optimism at all. It's absolutely disgusting. Just pummeling lower. Google is turning negative. QQQ got rejected at 295. Something interesting to keep an eye out for. So let's see how things play out here. What about the other tech sectors? Apple is rejected at 151.50 or $152. Is that where we got rejected at? Yeah, we got rejected at 151. So let's see if we hold 150 as support here, or if not, we're gonna pummel down over here as well. 150 is important in Apple. If we break under 150, we can go all the way down to run a test to 145. Gotta wait and see if this is one of the sell the reps kind of rally, or are they really going to buy the dip in this and then like keep it pushing higher and higher and higher to where it is trading at right now. Google should hold 113. If not, it's not a good sign. If you are trading Google, watch out for 113. It's very important. That's the 50 SMA as well. That should act as support. If we break below 113 or closing candles under 113, which means it opens doors for all the way down to $110. The main reason why I'm not trading this today is because I want to learn how the stock moves. Usually I used to study the patterns before I take any trades in it, so it helps me to understand how things work before me diving into it completely. So it's something to keep an eye out for. Looks like they're really pummeling it down right now. So let's keep an eye out for the healthcare stocks. Like, I don't know what the healthcare stocks are doing at this moment. MRK, for example. Alright, looks like Merck is still holding on to the 5-day moving average, but still trading under that 94.80 zone. If we break above the 94.80 and start closing candles above it, we can push all the way to 95.72. This is something for you guys to keep an eye out for as well. MRK, as long as if price goes above 94.90 or let's say 95, there is a nice trade here all the way to, or at least 100. That will be the next psychological level. So 95.70 is something to keep an eye out for. If we break above 94.91, we can push to 95.72, and above 95.72, well, that will be a new all-time highs for Merck, and we can keep pushing higher provided SPY and QQQ cooperates along with us. So for now, things are looking quiet, nothing volatile going on. SPY is holding on to critical levels, QQQ is holding on to critical levels, 50 SMA is still holding in QQQ. So let me know if you guys are trading anything, and let me know if you guys need numbers or charts for anything. We can go over that. So bulls, XLE is doing fine apparently. The energy sector, XLE. XLE is coming straight at the 20 SMA in the daily chart over here. If we take out, we can run a test to $72 all the way higher. If we get rejected here, we can come all the way down to run a test to $69. That is an important spot. Starbucks. Oh, Starbucks is looking good here, mate. We can run a test to 8140. Yeah, 8140 is the next level to watch out for, provided we close today above the 200 SMA at $80. So that is something to keep an eye out for. $80.40 is what I have. $80.09 currently at the 100 SMA. Breaking above it opens doors for $81.40. That'll be something to keep an eye out for. There we go, Google pushing higher here. Are you still in a bear market? How is AMD looking? Let's go over one by one. Let's see AMD. So AMD, as I said before, it's currently sitting right at the resistance. If we break above the lows, which is currently at 83.27, we can run a test to $85 easily. 83.27 is important. Breaking above it, it opens doors for $85 in AMD. So, are we still in the bear market? Yeah, we are still in the bear market, but that doesn't mean we can't get a bounces here and there, just like what we're seeing right now. So play the bounce until we see a reversal. For now, QQQ can head to 297 or 300 to the upside. So respect the trend. The overall trend is still bearish, but the short-term trend is still bullish. And I'm trading SPY to 389 with tight stop loss at 237. Yeah, that's smart. That's smart. That might work. That might work really good. All right, what else? Thoughts on Ford? Ford. Oh, it's at $12. All right, it's sitting right at resistance at this moment. So if we break about $12 and let's say $12.20, we can push all the way to run a test to the 50 SMA, which is at $12.50. There is no trade here, unfortunately, at this current moment for us. So it's better to just hold off on it until it breaks about $12.50. Metals and wire harnesses not coming from Asia. Maybe for day trading, but not investing in ESU auto. What particular stocks are you looking at? If you're going to trade the auto sectors, what stocks are you looking at in particular? If you can mention that, that'll be really helpful for everyone over here. AMC spike. What's going on with AMC? Interesting. Looks like from where we are right now, AMC can easily push to $18. So let's see if we can, or it's gonna back off from here. And make a note that today, I think by today's close, we have earnings of Netflix. Don't get caught up with that. I mean, be very careful. If they screw things up, it's not going to go well for either of the stocks, whatever we are holding. So something to keep an eye out for. But for now, things are looking good. But the question is, how long will it last? That is the important question we need to ask ourselves. How long will this bounce last? AMC trade. What do you think of BAC? Didn't Goldman Sachs report earnings today? I mean, there should be a sympathy run on all the financials. There we go. We're about 300 finally. So there should be a sympathy run for Bank of America as well. Yeah, here we go. There is a gap up. Watch out for $33.85. That is an important resistance level for Bank of America. And for support, watch out for 32.97. So we're currently undercutting the support, and looks like they're just gonna fill the gap and then run a test to the 50 SMA at $33.82. But for now, it's like just trade the strength until it says otherwise. I think Bank of America reported earnings as well, I guess. Oh, they missed in both estimates and revenue. That's bad. Yeah, stay away from it. I mean, you don't want to touch it. Price action is already in a downtrend, and we don't want to get involved in downtrends expecting for a bounce to follow. Right, Google is still holding. We're pushing higher here. Held on to the 50 SMA, and your stop losses should be at 113 if you're trading this. As long as the price is above 113, you can take the risk here and go long. Yep, Bank of America is sitting right under the 50 SMA, which is currently at $33. Yep, 33.87. That's the 50 SMA for Bank of America. Goldman Sachs is looking better when compared to the Bank of America, not gonna lie. We are above the 50 SMA, we capped higher. So if we do come back lower, watch out for 302 or psychological number at 300. You can take the risks there to go long all the way to 313 or the 100 SMA at 315. So it's totally up to you. Right, we are pushing higher in Google. So let's see how the rest of the day go, guys. Like, it's an interesting day as well. VIX is pummeling down here. If you guys want to hedge yourselves, the best thing to do is to grab some VIX calls and longer dated VIX calls for hedge. I mean, you can still play the trend to the upside. You can make money by playing short-term call options by having this hedge in long term. So just in case we pummel down, you can always have something to hold on to. You can always have something that keeps your portfolio alive in case of a massive downside days, like massive gap downs or stuff like that. For now, watch out for 297 in QQQ. It's very important. 297 is where it's the top of the range technically. For the past two weeks in general, we didn't do anything. We literally didn't do anything on QQQ. We were just being range bound. So when we are headed towards the top of the range, watch out. There's something to keep an eye out for there. Don't get greedy here. Always secure profits. Will UVXY spike or flatten today? From what I saw previously, VIX is bouncing off from the 200 SMA in the daily chart, though I don't see the technical side for volatility. That's something to keep an eye out for, because VIX is sitting right at support levels. That is something to keep an eye out for. So if you're trading VIX and if you follow technicals while trading VIX, keep an eye out for 24, I guess $24 is where the 200 SMA is. That is something important. As I said before, play the trend and secure the hedges along the way. That's the best thing to do right now. All right, Google is pushing higher here. Interesting. Expecting a lot of momentum, expecting a lot of activity with the momentum up in general. Can bulls get it over 50 this week? Tough call. I bet we will crash again later to find the 200. All right, to be honest with you, for me, technically speaking, 350 in SPY is inevitable. So they can get this, all this pops, whatever they need. They can like push it higher, whatever they need. But if you check the weekly charts in SPY, 350 is the 200 SMA in the weekly time frames. So we can get over there easily if we have another rejection in the SPY. So for now, let me clear things up. For now, we can easily, let's say we push all the way to like 392, or let's say we push all the way to the upside to 407, right? 407 is where I'm expecting another rejection to follow. But for now, the 50 SMA is right at around $392. And you see NASDAQ took above it, and I wouldn't be surprised if SPY took above that as well. So keep an eye out for it. Very important spot, 392. And if SPY follows the suit of NASDAQ, then 395, 397, 400, then the gap fill at 400. And this consolidation zone is very, very important for SPY. Remember, like a few weeks back, where we were trading at around 407 to all the way to 417, back and forth, doing nothing. So that consolidation zone is very, very important. So I won't be surprised if we pushed all the way to run a test to the bottom of the consolidation zone and then reverse back from there to form a new low and take us all the way to 350. I mean, I'm not taking it out of the cards that we reverse from 392 automatically, but something to keep in mind. I'd love to hear you guys' opinions on this. What are your analysis? When do you think the SPY might turn around? Let me know. So QQQ is sitting right at important resistance here, I guess. Yep, the top of the range it is indeed. The down Friday, up Friday, up Monday theory is still working out pretty good. Expect any timings to line up with Powell. Thank you for the reply. The Fed is currently on the blackout period. What it means is they can't talk about anything until the next FOMC. So we call it the blackout period. So until the blackout period is over, they're not going to say anything. And I don't think the next CPI is going to be as hot as the CPI, owing to the energy prices alone. That is something to keep an eye out for. And if you are bullish, on the markets, the next CPI, there are still a lot of shock factors which we have in the near future, like the negative GDP print, which might drop and then like give a massive shock to the market. That is something to keep an eye out for. And what else we got? The next CPI print we need to keep an eye out for. That is important. So all these are the catalysts which we need to watch out for in SPY and QQQ, especially if you're trading SPY and QQQ. The unemployment numbers, people will be keeping a close eye on it. That will be important. I wish I traded Google, not gonna lie. 113 to 114, that's a pretty good trade. So let's see, 115 is something which I'm watching on Google. If we break above it, that'll be good. SPY still has a gap to fill. Yes, SPY still has a gap to fill at 400, and QQQ still has a gap to fill at 300. So gotta keep an eye out for both. I really hope the charts in the TradingView updates for Google, it's pissing me off, not gonna lie. Absolutely annoying. The daily charts are fine, but the charts in the smaller time frame, yeah, not so good. There we go, Qs. It's a nice push here, testing the top of the range at 297. Interesting upside. Alright, this is where you need to be careful with Qs. If we are going to push higher and if we are going to close today about 297, that will be nice, but we are headed towards the top of the range. If you can see the chart in my screen over here, you can see how important it is. The past few weeks, the same number is, like, we are looking at 396.45. Very important number, very important number to keep an eye out for. And if we do get rejected from here, watch out. It's not gonna be a good look. Alright, so buying UVXY under 14 and selling over 18, typically this season, looking to transition to UVIX for the next 6 weeks basis. Well, you can try that. Will AMC ever hit 17? I would recommend not shorting Google today. As I said before, I'm just studying the price action. I've never traded Google a lot before, so keep an eye out. Don't just study the price action. I'm just waiting for the charts to like settle over here in my trading view. The Google, at least it's about 113 at the moment. You can go short if Google breaks 113 and under, but until then, just like either stay on the sideline or stay bullish. That's all I can say. If you break below 113, then you can go short again. Will AMC ever hit $17? Yeah, the probability is higher for now. If we close, especially if we close today about, exactly what's the number is it? If we close today about $16, the next stop for AMC will be at $17.44 or $18 to the upside. Yeah, you're just playing for Brian, buying UVXY under 14 and selling over 18 typically this season, looking into transitioning to UVIX on a 6-week basis. You can give that a try, I'm not gonna lie, because for this season VIX just doesn't want to drop below 20 bucks. We did drop below 20 once, and then it just popped immediately to $30 to $31 in the next upcoming few weeks. So if you want to hedge your folios, that's a good place to start your hedging on. Right, Google rejected 115 here, coming down lower. What's going on? Why am I seeing this piece of shit over here? Nah, QQQ, let's go over. Yeah, we're still range bound, nothing is going on. If you look at the 15-minute chart, we're still getting rejected, so we need a decisive break above 296. If we get that, that's good. If not, not so good, I would say. So what else you guys are watching? Interesting day indeed. Like the days like this, one thing you gotta note is, I know this market is difficult to swing, but I said it before, most of my big gains came from swinging. Because if you don't swing and if you're just day trading, there is no trades to take here. You'll be literally scalping for 50 to 20 cents move. You'll be going in and out on this type of moves. But if you are swinging, you must have caught like a 3 to 4 point move in QQQ and same in SPY. So swinging produced a massive returns, although it might be risky, but it produced, for at least for me, my huge gains came from swinging rather than day trading, at least for the past 3 months. So that's something to keep an eye out for. I mean, of course, manage the risk as always. So as long as you manage the risk, I don't think you'll be losing a lot of money by swinging or day trading or whatever it is. Risk management comes first, regardless of what it is. It's been said CYCC price target is 17 in a year. Who said that price target, mate? Is it a Bank of America, or is it even a stock? Look at that volume, it sucks. You said CYCC, is this a stock? Is this the right stock which you're looking at? The volume is untradeable here. It's terribly low, that's the problem. And it's also sitting right at the resistance levels as well. And I would like to know who gave that price target at 17 so I can look into it, their thesis. To be honest with you, I don't trade healthcare a lot other than MRK or XBI. I just trade the sectors. I don't trade individual companies other than Merck. So how can you manage risk on a swing? You can manage the risk on a swing by entering the trade with the money which you don't mind losing. For example, if your account size is, let's say, $2,000, and if you're swinging it, you can swing it with at least 10% of your portfolio. Like you can swing it with like $200 contract, and if you lose all the $200, yeah, you lost. But the most you can lose, the probability of markets going down like 3% or 4%, making the 200 into zero, is comparatively less, right? So that's the reason. Don't take swing trades. Like I don't take it every single day, but only take it during the high probable chance. Like for example, when Friday market was closing strong, I took a QQQ call before close and I sold it at the open right now. So those are the type of swings which I'm talking about. I spent like $103 and I sold it for like $210. So $103 is I can afford to lose. I don't care if $103 goes to zero, and that doesn't matter. That doesn't matter much. So the risk is actually defined for me. So even if it goes down, and let's say it's QQQ, instead of opening at 294, it opened at 290. I'll be down like what, $1, which will be $30, and I can always sell it, and I can always sell it for a $30 loss instead of a $100 loss. So as long as you know the price action, and as long as you have the high probability trades, I think swinging can actually give you a massive percentage of earnings when compared to that of the day trading, whatever you're making. So just invest the money which you don't mind losing, and only take high probability trades. So that's what I mean by managing the risk on swinging. And of course, I understand with day trading, you can put your stop losses at 10% and you can just cut it as soon as it breaks under 10% or whatever it is. But for swing, you don't have to trade every single day. You can just see a good setup. For example, like let's take a look at Costco. right? If you traded Costco last week and if you just day traded it, you must have missed out on this massive gap ups, whatever we got every morning before open. We opened at 4.9, we closed at 492 on Wednesday. We opened the day at 495, which is a $5 move, which you already lost. And then after that, we went all the way to the upside and all the way to close the day at $513. So if you got in anywhere here, you're not only paying a hefty amount of money because of IV just to day trade it, you are also going to be losing hefty tons of money on theta decay, because like you'll be going in and out, in and out, in and out, and you'll be paying taxes for every single trade you take, and you won't be knowing when to exit and when to enter. Let's say you exited over here and then the next day it gapped up again and you missed out again on a $5 move, and then it started pushing even further. So I'm not saying swinging is better than day trading or day trading is better than swing trading or whatever it is. For me, at least, swing trading offered a larger percentage in returns when compared to that of the day trading, at least for the past 3 months. Though as risky as it is, for me, it has worked out pretty good. So as long as you manage your risk, you'll be fine regardless of what type of trades you take. AMC will see 21, so eventually before pretty being a penny stock. I think the value is between 6 and 12 somewhere longer. In theory, it might hit 30 or something in the next couple of months. Yeah, I mean, I hope so. I mean, I've been seeing a lot of people bag holding this piece of shit of a stock, saying that sticking it to the hedgies pro. Yeah, shut the fuck up. No one cares. Like, your portfolio is important than sticking it to someone else. Like, I don't know what's going on in these people's mind. I mean, it's their money. They can do whatever they want, but the stock is in a terrible downtrend, and if we get a pop, it did. The worst part is in March it did offer a nice opportunity to every single one of the bag holders to get out of it. It went as high as $33. They could have got out of it, but nah, you gotta hold on to it, bro. Diamond hands, bro. Yeah, keep diamond handing it until it goes to $3. For now, we can see another lower high out all the way to like $22, as you said. That is possible. So if we can't break above it, $22 will be the last higher low it can have before it breaks down the trend line, whatever I drew all the way over here. $22, come all the way to test the trend line again at 14, and if we cut underneath it, so we can come down all the way to run a test to the lows at $9 again. So I hope people manage the risk and just sell into the strength. That is important, especially in a stock which is in a downtrend. So if you guys are trading SPY or QQQ today, we have earnings of Netflix, earnings of Tesla, a lot of earnings coming out today after close. Today or tomorrow? Yeah, tomorrow. We have earnings of Netflix tomorrow, we have earnings of Tesla, and all these earnings will be paving the way for how the next few days is going to be on SPY and QQQ. Google got rejected big time. I mean, people whoever joined trading after in 2022 or in the late 2021, you guys are the luckiest people out there. I mean, I understand the market is pretty tough to trade, but this is the time which actually lets you learn, because you entered the market in one of the most difficult times to trade in history, and we are literally setting records over here by making like a decade lows on everything. And this is the first time in a decade that S&P 500 actually posted a loss in the first quarter of their trading. That is absolutely insane. So, good morning, Mario. I have a question. I want to invest in silver stock, but I'm not sure which one to invest in. There's so many options. Can you lead me in the right direction on choosing the silver stock? Right, let's see what the silver is doing, the commodities. Commodities, SLV. Oh, alright, so looks like silver is bouncing up. Oh, we got to keep an eye out for Dixie if you're trading gold and commodities. Alright, Dixie is getting pummeled down today. Interesting. Alright, so alright, let me first answer the silver question, and then we can just go over the QQQ SPY and everything. So here's what you guys need to know. Commodities are inversely correlated to the dollar, US dollar, right? If the US dollar is going strong, the one which you see in the screen is the one which tracks the US dollar. We call the ticker symbol is DXY. So if you're trading gold and silver, this DXY is something to keep an eye out for. US dollar has been going strong, really strong for the past few days, for the past few weeks, or the past few months, I would say. And you can say the inflation is at 40-year highs, and how is US dollar going strong? It's not US dollar going strong, it's the other currencies are going even weaker when compared to that of the US dollar, which actually gives you an illusion that the US dollar is stronger. But in the reality, as you said, the 350 in SPY or the capitulation in SPY will happen when the US dollar starts to collapse and compared to that of the euro. You saw what happens to euro. Euro is completely destroyed, and the other countries' currency, you saw what happened to rupees in Sri Lanka, completely destroyed. You saw in Pakistan, completely destroyed, and the inflation, Italy, completely gone. That will come to the US dollar as well. It can't escape the fate, and it can't keep dodging the bullet for so long. That is something to keep a really eye on. US dollar, and when US dollar drops, guess what will outperform the market? Gold and silver. Those are the two which outperforms the market, and they did outperform in 1970 to 1980 stagflationary period. I don't see it any different for now. Let me show you the charts of the gold. If you see the chart of the gold, and you saw the Dixie, right? We were in an uptrend. Look at the chart of the gold here. You're looking at the gold futures. You saw the total absolute contrast as the dollar is pushing higher and higher and higher. Gold keeps undercutting the lows, and it keeps pummeling down, making new lows after new lows after new lows. Once we get a sign that the dollar has stopped, that's when the commodities will start piling up. They are crushing commodities right now for some reason, because they had to bring down the rate of inflation before the midterm election starts. So they got to do some manipulations to do this shit. So gold is one of the easily most manipulated currencies out there, because since it is controlled and held mostly by institutions. So that is something to keep an eye out for as well. When the dollar comes lower, gold and silver will outperform the entire market, which will in turn increase the inflation in the commodity space. And yes, it's a cycle. It's like a domino effect waiting to happen. We don't know when it will happen. It's something to keep an eye out for. So if you want to invest in gold, make a note of GLD. This is the ETF which tracks the gold which I just showed you. And if you want to invest in silver, SLV, it's the ETF which consists of a basket of all the silver mining stocks. That's something to keep an eye out for as well. It's safer, it pays dividends, so I don't see why not. So yes, day trading is more technical and should be done in 1 to 6 minutes, 1 6-minute trade, where swing trading is based on company dead market analysis done. But actually I don't think so. Swing trading, day trading, both involves technical analysis, both involves price action. For me, swing trading is anything which you don't buy and sell on the same day, right? So if you buy and sell on the same day, it's technically a day trade. If you're holding on to even for 1 day, it's still considered as swing trading. I'm not talking about holding it for 6 months. I'm not talking about holding it for 3 months or 4 months or whatever it is. If you get in on Friday's close, if you sell it on Monday open, it's still called as swing trading. You're swinging it. You're holding the position overnight and selling it the next day. So That's what I mean. In this market environment, let me be clear, by swing trading, that's what I meant. Do not hold on to a position for more than few days. Like, the trend is still to the downside, especially if you're going long. I would recommend not to hold on to any positions to the long side when the dominant trend is to the downside. So that's something to keep an eye out for. So if you're swing trading, and I think you're talking about leaps, if you're going for leaps or whatever it is for like 2 years out or 3 years out, then yeah, the technical analysis doesn't matter much. You're like going with the company's debt markets, I mean the company's debt, their revenue, their EPS and EBITDA and all those things. You'll be looking at all those stuff. But if you're day trading, or if you're swing trading, if you're taking weekly contracts, if you're taking something for 2 weeks or 3 weeks out, well, price action is always the king. Price is the only thing that pays. Time to long SPY. SPY is currently at 387.90. Let's see. We are just going to float around here for a while. So if you want to long SPY, I would wait for $387 flat. If you see 387, go long there, all the way, ride it all the way to the highs of today, with the stop losses at $387. If you break below 387, well, you can always cut losses there. I can only hear you on my left headphones. Oh, really? That's weird. Let me see what I can do about it. Interesting. I just factory resetted my entire iMac. How is it now? Is it clear? Is it okay now? They should be good now. I just turned on the mono audio. Like, it was fine before. I just reinstalled the OBS in my system again, and I hope it's not only me. Yeah, I have no idea, because I just turned on the mono audio in my audio capture, so it should be fine now. And if it's still not, let me know. We can sort it out in the next stream, because we good? Yeah, all right, awesome, amazing. Yep, I'm sorry about that, because as I said, I just reinstalled the OBS because I rebooted my entire iMac and I got to set everything up from the scratch. So now it should be good. I just turned on the mono audio, so you can keep an eye out for both. Amazing. You guys are just telling me right now. You guys are the worst. I'm just kidding. Thank you for letting me know though, because I wouldn't have known that, because I can't hear myself when I'm talking with this OBS. So that's the issue. Nah, thank you so much, boys. Appreciate it. Right, so what's going on with Google? Are we... Oh, we recaptured 113 again. Yeah, this is just annoying, isn't it? Just going back and forth, back and forth, back and forth. They don't want to give up. Yeah, I just can't wait for this to get sorted, because look at my chart. This is how my chart for Google is looking at right now. There is like no way for me to keep an eye out for it. Absolutely insane. Right, so let's just keep an eye out for SPY. So if you guys want to go long on SPY, your risk is at $387. So if you want to go long, 387 is something to keep an eye out for. So 387, go long there, with the stop losses at 386.50, let's say. So if you dump below it, you can always cut losses and say sayonara. And if you hold on to it, you can just always, if you're trading for long here and if you're planning on swinging it, at least give yourself some time. Don't go for two-day expiration. It doesn't work out most of the time, because you will be right technically, but if you're not giving yourself enough time, then that will be kind of very annoying if you think about it, because you'll be right in the direction but not with the time. So you'll be losing money even though you're right with your thesis. So always give yourself some time when you're going for swing trading. And just because you gave yourself some time doesn't mean you have to hold on to it till expiration, but giving yourself time also strengthens your thesis. So as long as it's about 387, SPY can run a test to 390 or the declining 50 SMA at 392. So I have a theory here. I mean, QQQ broke above the 50 SMA, right? I do believe SPY will follow the same. SPY will break above it and fill that gap at 400. 397 is the first gap which we need to watch out for. Sorry, 397, if we break above it, then the 400 gap will be filled pretty quick. Same with QQQ. If we break above 297, we can easily go up to fill that gap of 300. These are just my thesis. So let me know what you guys think. I'd be interested to know your opinion on this. It's just a theory, as I said. Our updates go on a day-to-day price action as usual, but for now, that's just a theory. We gapped it higher, and we might have some consolidation days into Tuesday or Wednesday. And if the earnings comes out really good, especially for Netflix and Tesla, we can push higher. But I'm not having enough convictions on Tesla. Imagine if Tesla pulls a Netflix, right? It'll be insane. Imagine Tesla dropping to $500 after earnings. Already all these big shots are having a hit list for Elon. So if they want to take revenge on him, dropping Tesla to 500, now that will be a sweet one. 500 from where it's trading at right now, it's like what, $200 drop? It'd be ridiculous. There'll still be these idiots who will be like, oh, I want to buy the dip, I want to buy the dip. Some people tend to forget stock is different from the company. A company can be really good, company can be producing amazing results, but stock doesn't actually correspond to the price of the company. Market is always forward looking, so they will price it in. If they smell a whiff of weakness, they will price it in. So I hope your Reverend Elon doesn't mess up the earnings call and then say some bullshit which might tank Tesla to $500. So let's see. The move from wherever we are right now will be guided with the earnings, whatever we're gonna get. That's the only unknown which we have left on file at this moment. All right, Google, we are under the 50 SMA again. Unbelievable. Have you guys noticed this weird thing which was going on when these companies had a lot of chance to do their stock split in a bull market but failed to do so? When it's actually losing value at this moment, every single company coming out with the stock split, Google, Amazon, Shopify, and GameStop, fucking GameStop, yeah, whatever, like GameStop, like all these companies, all the charts are in a terrible downtrend, and they just wanted to raise equities. Why do you think they're doing that? It's pretty simple. If a stock split is happening in a bear market, when a stock is down like 40 to 50% of the highs, they just want us chumps to buy into it so they can prop up the stock price, so they can dump it in your head once we get the pop. You can see what happened in Amazon, where they had the massive pop to like $120 before dumping all the way to 102 again. So have a close watch out for it. Don't fall for this nonsense by buying into the hype and buying into the stock split mania or whatever it is which is going on, and then like lose a bunch of money, because there is a big psychological reason on why the company is doing it, because they want to prop up the stock price in order to keep up with the competition and the valuation of the company. So something to keep an eye out for. Right, so SPY rejection at 390. SPX cheaper than TQQQ today and likes to follow it. SPX and TQQQ are totally different, mate. TQQQ follows QQQ. TQQQ is the leveraged version of QQQ, which is Nasdaq. So if you want to trade TQQQ, you got to keep an eye out for QQQ, not SPX. Or NDX if you're trading Nasdaq with the higher contract sizes. Tesla forward earnings and guidance will dictate. Yes, that's what I said. Like, if Elon didn't come out and screw the pooch like you always do, so we might rally, we might trigger a huge short squeeze. I saw a huge order come in through order flow. Someone spent like around $2.5 million, I guess, on call debit spreads on Tesla, 880 strike and 910 strike. So technically the width of the spread is $30, which means the maximum money he can make is $3,000 in this per contract. He spent like $300 in one contract, so the maximum money which he can make will be $2,700 if Tesla closes above $910 by August first week. So about 910, he'll be making $2,700 per contract, and he had like 3,000 of those. So that's a insane risk to reward, if you ask me. So if it works out in his favor, if Tesla goes above 910, well, he'll be banking, that's for sure. Also, yeah, back to the point, if you're trading QQQ, the one thing which you got to keep an eye out for is QQQ, or NQ if you're trading futures of NASDAQ, or NDX if it's the real-time contract. So just like SPX, there is something called as NDX for NASDAQ. You got to keep an eye out for that. So we are just floating around here and there. I mean, one often follows the other. NASDAQ 100 SPY and leads the back on the 6 week scientific wave cycle typical, and it doesn't get that. The QQQ follows the QQQ, follows Tesla or Apple. Oh yeah, I'm sorry. Yeah, I got it. I see what you're saying. All right. So the problem with this is, right, the SPY, the major holding for SPY is tech. 40% of SPY involves tech. That's the major holding, followed by financials and the other sectors. And QQQ is just tech and tech alone. So the major holding of QQQ, as well as you said, Apple. I wouldn't call Tesla as major holding, but Apple, Microsoft, Nvidia, Google, these are one of the major holdings for NASDAQ. So if any of these gets clapped, NASDAQ is going to get clapped, which is going to clap S&P 500 alongside with it. So that's why you will see this weird correlation happens, because whenever financials lead the markets, tech will underperform, and whenever the tech leads the markets, financials will underperform comparatively. When everything outperforms, that's when you'll be seeing massive gap ups in all the sectors and all the markets, S&P 500, NASDAQ, Russell, and everything. So that's something to keep an eye out for, because S&P 500 has multiple sectors, but tech has a heavy weight. So I agree with you on that. Most likely all the markets moves the same. If tech underperforms, it puts pressure on financials, it puts pressure on the other sectors like industrials, biotech, and everything. So I agree. Even with QQQ, it still remains the same, because we're still stuck in the range in QQQ. Until the range is broken, I wouldn't bet too much to the upside over here. I want to see QQQ to break about 297 to take the trade to the gap fill at 300. That this is a bear market rally or bull trap is a great reminder for swing trader catching the falling knife. Exactly, 100%. So most of the people look at this, right? They look at this and say, oh, look at this, we're having a constant stream of higher lows, and we're having a constant stream of like higher highs, so we are turning into a bull market. But they fail to look at this. This is the primary trend. This is the dominant trend, series of lower highs and lower lows. This is the prominent trend. So just because we have this doesn't mean we're going into a bull market. This is the secondary trend. The secondary trend is still to the upside. I agree, I give you that. But don't lose focus on the primary trend, which is still to the downside. And that's why it is always better to, whenever you see a rally, sell into the strength. You won't believe, like of all the fund managers I've spoken to, everyone who, whenever they see a pop, they're waiting to do what? They're waiting to sell into the strength. They don't want to hold anything over because of all the macro factors which has been going on. Impending recession, yeah, that's not a good thing. Inflation at decade highs, well, that's not a good thing. What else we got? Unemployment which might pummel down anytime soon, yeah, that's not a good thing. Slowing economic factors in almost the entire world, yeah, that's not a good thing. Like, there is, whatever you see right now, you can't find one positive information about any country's economic side. Especially with the Fed, whatever we are doing right now, they are still lagging behind. They will still like start increasing the interest rates when it's like in a slowing economy, which might push us even into a further recession. They are focused on the lagging data like unemployment numbers or the CPI, which is also a lagging data. You won't be knowing what's going on. They are data driven, which puts them in the situation which they are in right now at this moment, because they were late in reacting to every single data whatever they got. So for now, the primary trend is still to the downside, so don't forget about that. Don't go heavy on the bull side and get calls after calls after calls and then get smacked once the primary trend gets hold of the secondary trend again and starts pummeling down again. So even though in short term, I would say if you're a trader, short term, we're still having an uptrend, which is a secondary trend, which is not a primary trend. And when it comes to strong resistance levels, go short again, all the way to the downside, because risk to reward is much higher to the downside than to the upside over here. So this can very well be the bottom, we'll never know, but it's in a downtrend until it's not. So something to keep an eye out for. And the one of the worst sucker punch which QQQ gave us was right over here. Yeah, this one, I guess, right? March to April. Yeah, this is the worst. Like, when this happened, everyone was like, oh, I think this is where the Meet Kevin debacle started, right? Like, he was like, I sold everything, bro, I don't want to hold anything over here, bro, and all those things, bullshit which he was talking about. And then Apple single-handedly caused this in NASDAQ. And everyone was like, oh, it's turning bullish now. Everything is turning bullish. So we're going to buy call. We're going to go to all-time highs and all those things, right? And then you saw what happened. We touched and then bang, new lows, and then touched another new highs again, bang, new lows. And I don't see why this time it will be any different. So yeah, something to keep an eye out for. Don't forget about the dominant trend, which is to the downside. This will be like this until Fed says, okay, we're going to chill out a bit. We're not going to raise any more interest rates aggressively. So we're just going to take it slow. And the markets, which is addicted to the cocaine, as you see, will take it as a good news and start pushing higher from there. Who cares about the macro analysis and all that stuff? We just need more cocaine from Fed. Alright, so we're just floating around here. Nothing to do. Nothing much to do at all. So let's see what our AMC is doing. Did anyone of you take the trade in this? Is anyone of you taking this trade all the way to $17 to the upside? If you want, I can join you guys. Let's see. It's at $16 right now. How much is a $17 call? It's actually pretty cheap, you know. It's only going for 55 bucks. Unreal. So let's see if we can push to $18. So I might take should we be fine holding SPY puts 801 expiry? What strike are you holding? And I'm kind of surprised you still didn't cut it when we went all the way above 385. So it depends on your risk management, to be honest with you, because as long as SPY is about 387, the probability of SPY pushing to 390 and 392 or 395 or 400 is very much higher. So are you sure you have enough extrinsic value in your puts to make sure that it's not going way worthless or way out of the money? That's something which you need to ask yourself, because I don't know what strike you're holding. I don't know when did you purchase it or whatever it is, but the few things which you need to ask yourself is, you got to know where the SPY might go. As long as the SPY is about 387, we can go to 390, 392, 395 or fill that gap at 400. That is still in cards. If SPY goes to 400, the worst case scenario, will you still be having enough premiums left on those puts? So just in case if you turn around after that, your puts might come back to life. You gotta ask yourself that. And also never ever ever average down on puts when we are above strong support. So that's a quick way to be losing money, so don't do that for now. So if you break below 387, you can average down, that's totally fine. And if you break below 385, you can average down, that's totally fine. But for now, yeah, just it's up to you. You gotta ask yourself, how fast do you anticipate mortgage-backed securities sell-off on Fed balance sheet to affect day trading markets or shorting BAC due to pending banking collapse at 575 points? All right, let me be honest with you, right? All these mortgage-backed securities, all these stuffs, or the Fed balance sheet sell-off and all those things, it'll be happening gradually, and you won't even notice it happening until people caught a whiff of a massive selling or whatever it is, right? So you can't, as I said, in 2008, it took market 2 years to see the bullshit what's going on, because they were full of themselves into believing whatever the bank says or whatever it is, right? So that's the main reason why fundamentals and the market in itself doesn't correlate with one another just like they used to. It's going to take a while for markets to see through the bullshit, and once they see through it, then there won't be any stopping them from selling it until they regain the trust back. So which we are at right now. If you see in 2021, the Fed was messing up left and right, but the market still had trust in them. But the beginning of 2022, bond markets were like, yeah, I don't trust you anymore. The yield started shooting higher, which caused a sell-off, and then the Russia news came and the oil started shooting higher. The market sold off even further, and now we are in a situation where sell the rumor and buy the news kind of thing. Before it used to be buy the rumor, sell the news. Right now it's sell the rumor and buy the news later. So right now what they're doing is, I will just sell it right now and I'll ask questions later. This is what happens in a market where it doesn't have enough trust in any of the rallies or any of the pops which we are getting at the particular point. So something to keep an eye out for. But the banking collapse or whatever it is you're talking about, I have a friend in my Discord who is like a massive bear. He was always talking about the credit card debts which can't be paid, and a lot of housing foreclosures, the mortgage foreclosures or incoming, or the credit card debts is going through the roof, and a lot of people can't afford to pay the credit card debts, and a lot of credit card companies will be affected. So these are all his theories, right? So even though I agree with all of them, you can't place any bets on it, because unless you have a certain sets of money, I don't think you can short the swaps, or you can't place any shorts on the mortgage-backed securities or whatever it is directly. And your brokerages won't allow you to do that. You need to have a certain amount of funds in a certain amount of banks in order for them to create a particular short for you, so that you can short the mortgage-backed securities or the swaps or whatever it is. It's something to keep an eye out for. Like, I do keep an eye out for all these things, like there's credit reports, whatever we are getting on a monthly basis. All those are something to keep an eye out for. But it's going to take a while for market to see through the bullshit, and once it does, yeah, we're going to have another flush down again, which is the primary trend is to the downside. So Buy order at 388, sell order at 390 into 10,000 leverage. Yeah, let's go tits deep. So what's gonna happen if it breaks below 387 then? With the 10,000 leverage. Great live stream. Thank you, Johnny. Appreciate it. If you guys enjoyed it, don't forget to leave a like, subscribe to the channel. I'm thinking of doing it on a daily basis, provided the time actually suits my needs, because I did it 2 weeks back and then I got busy with work and I couldn't follow through. But for now, I'm determined. So let's see. Every day morning 9 to 11 will be live, and I'll try to extend that from 11 o'clock and see if I can go through the entire market session. So let's see, that's the plan for now. So if it works out, it'll be great. So QQQ, it's still below the range. SPY is still about 387. So it's still a quiet day, isn't it? So Google, yeah, Google is pummeling down at the moment. Jesus Christ. Nice. Alright, who want to take AMC with me to $18? Anyone is interested? The answer should be no. Don't follow me here. I'm just spending $30 on this trade. If it works out, it works out. If it didn't, it didn't. I'm getting AMC $18 calls, just one contract for $30. That's all it is, $30. And it's a very risky play if you ask. I mean, it's just $30, but still it can go to zero, and I don't like my play going to zero. But let me see where I'll put my stops in on this one. AMC. Alright, so technically my stops will be at $16.59. If you break under it or close under it, I'm out. So that's my plan for now. So I got in the $18 calls for $34 each. So if you guys are interested, you can hop in. Very cheap, actually. Very cheap, just $34. And the probability of it going in the money is higher as well. So we are technically risking, how much are we risking? 15.59, 60 cents. We're technically risking 60 cents to make $2 to the upside. So that's a good risk to reward if you ask me, for $34. And the delta in this is $25 and the gamma is 13. So for $2 we can technically make $63 in this contract, so which is more than 100%, and I'm happy with it. So let's see. Just going back and forth between range and AMC. So it's the first time me trading this piece of shit. It better not let me down. Apple holding, where we are at Apple. Oh yeah, Apple is still above 150. So as long as Apple is above 150, probability of 152.50 or running a test to that 100 SMA at 155 is still higher. So let's see. If you want to go long on Apple, your stops should be at 150. So if it breaks under 150, we are going down to 147. So something to keep an eye out for. My Google chart is garbage on Webull. Bro, you're telling me. Check this out on TradingView. This is daily, right? Look at this shit. Look at the VWAP. Look at the EMAs. What the hell am I supposed to do with this? I can't do anything with this. The chart is not updating yet, so I can't even take a trade in a short-term basis, and I got to make a bet based on the daily charts, which is almost always turns ugly. Morning, Mario. Thanks for the lessons you're giving, man. It's helping me understand the market a little better. Still have a lot more to learn. Hey, I appreciate it, Carl. Thanks for joining the live stream. as I said, like if you just join the markets, this is the best time for you to possibly join it when compared to that of the 2020 or 2021. Most of the people who joined in 2020 are spoiled by markets which always goes higher. Every time we go down, they can always like, oh, buy the dip, bro, we're only gonna go higher, bro, there's no lower lows, bro. Yeah, now we're seeing. So by the time they came back to the realization that the markets can go down too, they already lost a lot of money. Google like Tesla lead pullbacks. Should it worry other long positions on the HAR or not? Pulling out before lunch, which has been recurring if Google doesn't retrace. To be honest with you, I don't understand what you're asking at all. Google like Tesla lead pullbacks. All right, I assume that you're saying Google is causing the pullback in Nasdaq because the Google is underperforming. And should it worry other long positions on the R? I mean, all the fangs are like a spider web. Let's say it like that. All right, if you cut one end of the spider web, it's going to cause a domino effect which brings the entire nest down. So we need either one of the stock outperforming crazily and the other stocks kind of trading flat or not going down much lower, then it'll just keep the QQQ and SPY stable. But there is no specific time for when things will happen or when things doesn't happen. So for Google, for now, it has to close above 113. If it's closing below 113 today, that's not a good sign. Simple as that. Where is it at right now? It's currently at 112.40. So we got to close today above 113.07. That's all matters for Google. If we close above 113.07, we can try again to run a test to 115. If you're not going to do that, then we're going to come back all the way down to 109 or whatever it is. Like, what's the next level? So 110 will be the next support to watch out for. I said I'm not trading Google because I've never traded Google. I'm just like keeping an eye out for price action. I'm studying it until I get familiar with it. Once I get familiar with it, then just like Amazon, we can do it every single day. It's interesting. So for today, AMC is the only trade I took. I closed out my QQQ and I'm just gonna hold on to this. I'm up like 29% for the day and that's it. I'm still holding on to my VXX calls. And you can see what VXX is doing. The volatility is slowly creeping higher as the SPY is going up as well. And that's a good thing because as the volatility contracts, we are at a critical level in VIX as well. So you can take the risk and go long in volatility by setting up your hedges. Let's go over and keep an eye out for SPY. Why 387? Again, it's still a floater formation. So before me signing off, keep an eye out for 387 in SPY. Keep an eye out for 294 in QQQ. If we break under 387, 385 will follow. If we break under 294, what will follow on QQQ? If we break under 294, 291 will be the next level to keep an eye out for. So these are the levels to watch out for in SPY and QQQ. So don't get overly bearish until these levels are taken out. Don't get overly bullish until 297 is taken to the upside, and 287 is still holding. You can still be long in SPY. Don't get overly bearish until we break below 387. Don't get overly bullish in QQQ until we break above 297. So if you guys enjoyed the stream, don't forget to subscribe to my channel and leave a like and join the Discord, join the Patreon. Link is down below in the description. and I'll see you guys again tomorrow, I guess. So from tomorrow we'll have a particular topic to talk about, and I'll go over the spreads in the stream as well. So you can just try to open one on real time and see if it's working out or not. So we can do something fun like that. We'll start over from tomorrow. Yeah. Thank you so much for joining, boys. Appreciate it. Have a good one. Bye-bye.